Real estate investors, welcome to your April 2025 housing market update for Bryan and College Station. As we're going to break down the most recent data as of March of this year, available from the MLS. Again, this is all for you on your favorite channel, Investing in Bryan and College Station, where I help investors grow their wealth through real estate in my favorite towns of Bryan and College Station, Texas. Guys, I do not want to waste your time. This data is very interesting, and it's indicating to me that we are in a buyer's market, and let me tell you why. So we're looking at Bryan and College Station, all residential property types in the metro area. The frequency would be monthly, came out, this is March 31st, and this includes all types of construction. So this means both new builds and existing homes. Let's start off with everybody's favorite number, the median price. We're now at $312,000, $312,770. That is up from February, but down year over year. So we have an uptick since February, which we usually see. We usually see houses sell for more as we go into the summer months. There's more buyers, and we usually see that uptick. It's a cyclical nature. However, we want to look at that year over year, right? That adjusts for seasonality, and we're down 3.1% year over year. That's a pretty aggressive year over year monthly decline, right? Because this is just for the month of March. That's a little bit worrisome. Closed sales is up. This is good. This means that there's more people buying houses than last year, but I think this is more a direct result of the number of active listings vice an increase in demand or a large increase in demand. So we're up 10% compared to last year. Last year was also a very slow year. 320 units sold. All right, fair enough. But active listings up 25.8%. That is a trend that we have seen time and time again. This growing active listings. We saw it in January, we saw it in February, we're seeing it again in March. We're gonna dive more into that here in a little bit. Months of inventory. A more complicated number, right? Active listings, pretty simply, how many houses are on the market? Months of inventory is a absorption rate. It is the number of active listings divided by how fast homes are selling. Basically, how long would it take to sell off all of the homes if no new homes were listed and the rate of sale continued? That doesn't matter as much as the fact that this number is an indication of whether or not we're in a buyer or seller's market, right? It's a measure of supply and demand. And nationally speaking, historically speaking, according to economists, if we're between 5 and 6 months, we are in a balanced market. But we know historically here in Bryan and College Station, we stay pretty perpetually in a seller's market. So in this case, if we get above 4, you're gonna feel like we're in a buyer's market. We're at 4.6, guys. We're approaching a 10-year high for our months of inventory. It means that we are as close to a buyer's market as you've ever felt, unless you were buying 5 years ago. And honestly, for most of my buyers out there, this is gonna feel like a buyer's market. All right, this blue line is an interesting one. That's the one I wanna focus on. Let's look at this real quick and see if I can explain it to you. This is you can read it right here. The growth trend, it's the 12-month moving average for the median price and closed sales to indicate trends. So this is the trend for the previous 12 months of the appreciation, right? So this is just taking that percentage appreciation year over year each month. So you can see things went bonkers in 2022, 2023. Prices were growing very aggressively, very fast. The rate of growth slowed down. This is the rate of the appreciation slowing down, and we bottomed out back in August and September. Guys, that's when we previously saw months of inventory up at 4.6. And then the market started to heat up a little bit. Houses were selling for a little bit more. Our appreciation was increasing. But over the last few months, we've saw another downturn, another reversal of that. If this goes negative, that means that we're gonna have negative appreciation. And you can see we got pretty close, but never touched it. We got close back in April of 2020, where the 12-month moving average was at 0.1, where we were almost negative. We didn't hit it, but if you noticed then, what else was occurring? Well, April of 2020, we had the highest number of active inventory. If you look at our months of inventory, where was that spike? Boom, That's April of 2020, guys. See how that all plays out? And guess what numbers we're seeing very similar to April of 2020? What I'm telling you is that the appreciation is slowing down. We're not seeing the appreciation right now. This is all indications of a buyer's market. Days on market, also sitting here at a 10-year high. Houses are sitting longer. So even though we're selling, there's so many houses being added to the inventory, there's just not a proportional amount of buyers to sellers, which puts us out of whack, which creates a buyer's market. That's the market update. Hopefully this helps you guys realize what's going on in the market. If you're selling right now, you have to realize that you are probably not getting the price that you want. If you want to sell it in less than 3 months, you need to price it aggressively. If you're a buyer or you're an investor, guys, this is a great time to get pre-approved. I think there's a lot of really good deals that'll start hitting the market or are on the market right now. And you shouldn't feel the pressure like you did 2 years ago to make an offer on the first house or to go over asking or to come in and waive your contingencies or anything goofy like that. Yeah, market update, April 2025. Hope it helps you guys out. I do want to turn to our bonus content and our client-based question because this was actually a pretty fun one for me. So I had a client who reached out and they were asking about the size of a house. Does the square footage matter in terms of maximizing your cash flow, maximizing your rent to purchase price ratio? I love this question because I believe this is the type of question that an intelligent investor like yourself should be asking. This is one of my investor clients. He's new to the College Station market, but he is an intelligent, analytical investor looking to maximize his hard-earned money just like everybody else. And his question was, do you find that square footage matters much in rental value? Would an 1,800 square foot house rent out for much more than a 1,200 square foot house? Guys, what he's trying to do is find the sweet spot. Should I buy a smaller 3-bedroom, 2-bath or a larger one? Where is the optimal rent rate to purchase price ratio when it comes to square footage? I love that. I didn't want to give him just a willy-nilly answer. I jumped into the data and here is my email back to him. I told him I pulled data based on the last year's rent rates. All the houses are single families with 3 bedrooms built between 2000 and 2010. The only difference between the houses were the fact that the square footage range changed. I looked at groups of houses between 12 and 1,400 square foot house, between 14 and 1,600 square feet, and between 16 and 1,800 square feet. Ultimately, we're looking at the average rent, which you can see there on your screen, and the average purchase price. What we found is 12 to 1,400 square feet, the rent to purchase price ratio, 0.66. 14 to 1,600 square feet, 0.67, and 16 to 1,800 square feet, 0.63. So the sweet spot based on this data, of course, is 14 to 1,600 square feet, but really you're not that far off with the smaller 3.2s. But as you grow in size, 16 to 1,800 square feet, the price increases at a larger proportional amount than the rent rate. So your potential for cash flow drops off. Guys, this is what I've seen, this is what I've felt, but the data backs it up, and the data is what is important to you as an investor. So I want you to have these data-driven questions. If you've got questions about bedrooms and whether that affects rent rates, bathrooms, or size of units in fourplexes or duplexes, I'm here to help. I love breaking down this type of data-based analytics on our investment properties. You can reach out to me. All my contact information is in the description below. I'd love to help you out. I'd also really love it if you hit the like button. And I would absolutely love it if you subscribe to this channel, where I will drop a video every single week bringing you value, growing your wealth through real estate and Bryan and College Station. My only ask is that until next week, you take it easy.